welcome to Boss Up Academy, where you can get your real estate, stimulus, as well as business needs met. And tonight, while Facebook is kind of building our audience, don't forget to follow us on Instagram, Twitter, and Facebook. Um, Drop us in the comments or DM us any topics that you may want additional information on. Tonight, we're talking about life insurance, and we're going to talk about different life insurance and why we're going to help you avoid those GoFundMes that slim to hardly ever work to meet the needs of the people. So, I'm going to go ahead and let you, Tony, introduce yourself, and then we'll go from there.
All right. Good evening, Facebook family. My name is Tony Yarber. I work with Universal Benefits. I've been there for 12 years, the best financial decision of my life. So I am very excited about doing this interview with Miss Erica, the boss lady herself.
So, I want to, and I could not resist doing this before we actually get started. So let's talk about, before we get actually into the insurance part, just give us an overview of some career opportunities, because I know that a lot of people are looking for new careers, new ways to, generate some additional income, because everybody doesn't want to quit their 9 to 5. But they do want to make some extra good money, and they don't want to have to work in retail at night and on weekends. So tell us about a career opportunity before we actually jump into the insurance part.
Great. I'm glad that you asked me that. But before we get into that, Erica, I have some texts. Some people are trying to get on this thing live, and I don't know how to tell them to get in.
Okay, so tell them to go to Boss Up Academy, or Tony, what you can do. Do you have another device where you are? Okay, so take your device and go on my Boss Up Academy page, or go to my Erica Simpson page and forward it to your page. And then that way they can either pick it up on Boss Academy, my page, or your page once you share the live on your page.
So we'll go to yours. Okay.
Yeah, but do while she's doing that, do drop us some comments or questions that you may have about life insurance, because we're going to talk about several different types of policies that people may or may not know that exist, and how they can actually work in your benefit. Okay. So you got
They got on. I didn't help them, but they got on. So let me tell you about the opportunity with Universal Benefits and the opportunity within the insurance business, because it is, like you said, Erica, people are looking for things that they can do on their own, and things where they can make a great income. And if you're looking for that, the opportunity is here. You don't have to look any further. But in that looking, we're looking for full time. We're not looking for part-time. We understand that people may have a job and they need to transition out, or they're not really sure if they can do this thing. But we assist you. We assist you from A to Z in excelling in the insurance business, because we know if you plug all the way in and do all of our trainings, then we know that we can get you to a 6-figure income. We have the training your first year. We can get you to a 6-figure income. We have the training available for you. We have a 3-day full boot camp that will assist A to Z in that insurance business. We have leads. You don't have to be looking for a brother, sister, mama, daddy. You don't have to do that. We have a lead system. We have an exclusive lead system that will take you to that client, where you don't have to worry about, where am I going? How do I find it? And the most important thing, well, I shouldn't say most because it's something else, but how you get paid. We get paid every single day. If I sit down with you, Miss Erica, today, and you purchase a policy from me today, Lincoln pays me today. If I submit it in by 5:30, that is huge. And not only that, the residual. Where do you go that you continue to get paid? As long as that client stays on the books, I'm going to continue to get paid on that client. That's why the opportunity is so huge here.
Okay. And, I think that that is totally awesome because a lot of people start out in their new business. And then let's talk about how much does it actually cost to start up. I mean, because most businesses, you got to have at least $5,000. So in this business, how much do you actually need to get started?
You would be surprised how much it is to start your own business in first year, make six figures. If you're not licensed, of course, you need to get licensed. For your license, you could do Universal Benefits has a discounted plan for you for $39.99. That's it. That's all. You study that. You go and take the test and pay $45 to take the insurance exam. You get your fingerprints at $25, and you're in business.
Okay, so we talking about less than $500 if you include gas in your car to get
That
there.
yes, ma'am. Yes, ma'am.
And I just want to reiterate to people, even though we're going to be talking about actual policies tonight, but one of the top four things that create millionaires is real estate, finance, stocks, and insurance. And I don't think that people realize the amount of income that they can generate through residual income because most people in my world in real estate talk about rentals and short-term rentals and all that, and they don't realize that you can create passive income while you sleep in other areas as well, such as insurance.
Exactly right. Exactly right.
So like I said, that insurance is up there at the top four to make people millionaires, or they've got some kind of insurance in their portfolio that has created them a millionaire if they're not just selling it. So we do have a couple comments
Mhm.
that I'm going put up. Okay, it's definitely needed for our community. Keep up the great work. Then we're going to go ahead and get into our questions. So we'll start prior to the questions that I'm going to ask. We'll ask immediate questions that are posted here on the live. So the first question that we have is, what is compound insurance about? I keep seeing it on TikTok.
Compound interest insurance. I said you keep seeing that on TikTok. That is something, let me tell you, I don't do. I don't do compound interest insurance. So I wouldn't be able to. I'm sorry, Miss Lakeisha. I can't expound on that because that's not something that I do.
Okay, so thank you. But Lakeisha, what I'll do is I'll look into somebody that that may do that. Then we have Miss Pamela Richburg, the
Woo-hoo.
number one final expense. That's right, sis, Tony Yarver. Um, so let's just talk about the final expense insurance first, and then we can go into the other ones since
Okay.
that one has been mentioned.
Okay. Oh, I was wondering, we're gonna take questions for it or
Well, no, go ahead and just start telling us because since she's put up that you're the number one final expense insurance, so go ahead and let's just jump in there and tell us a little bit about final expense and how it works and what the benefits are and who qualifies.
great. Thank you, Miss Pamela Richburg. That is my sister in the business. She is a boss lady herself, one of the top directors within UBI. So I have to definitely give her a shout out. She is doing big things with the company and has been since she's been there. But final expense, people normally don't know what final expense is. They say, well, what is final expense? Just a fancy name for burial insurance. That's what we focus on. Our demographics for final expense are those seniors, 50 to 85. That is our demographics. It's to cover though if it's cremation, if it's funeral, and then if it's they can get extra, where of course a funeral may be 10,000, 15, and the rest will go to the family. But that's what final expense is. And we deal in just a certain market and final expense. Final expense is huge because everybody has to have it. Everybody has to have that burial insurance. We do. We sell the big term, we sell the big whole life, but you want to have a small final expense to take to that funeral home, because final expense pays out quickly. It pays out within 24 to 48 hours. And the funeral home is going to want their money, and they're going to want their money really quick. So even if you have a large one, like I do myself, I have a lot of large policies, but I still have a final expense, because when my sons go to that funeral home, that final expense policy, I do have the cash, but that final expense policy is going to pay out, and my sons are not going to have to use my money that I have. They're not going to have to figure it out. If I didn't have any money, they're not going to have to figure it out, because they know that final expense policy is going to pay out within that 24 to 48 hours. So that's why we always say, have that final expense in place. If you go to any funeral director and to ask about Lincoln Heritage Life Insurance Company, they're going to say, oh man, they're a good company because they pay quickly. And that's why they love Lincoln Heritage. And that's why we always say, get that small. I don't care how much money you have or you don't have, always get that final expense, because it pays out quickly. Those big policies, they're going to pay out within 4, 6, sometimes weeks, sometimes 6 months. And if you don't have that money on hand, then mom, dad, brother, sister is going to be sitting in that funeral home.
Okay, so why do you think, if you can expand on, why does the larger policies take more time to pay out than, say, a final expense policy?
Great question. Larger policies take longer to pay out because they're going to look for ways not to pay you. So they're going to investigate on those large policies. They're going to investigate, well, how did they die? Was anything wrong? Was anything wrong? There's a clause in that policy that's going to stop them from paying. So they're just going to investigate it a lot longer because they have so much more to pay.
I just wanted to comment and say, Ebony, I'm not skipping over your question. I'm gonna come back to your question just because right now we talk about the final expense right now, and then we'll move over to your question. But I'm putting your question in the parking lot, and I've got it flagged to come back to, so that we don't get off track. So having a small, and then when you say small policy, dollar figure wise, what do you mean?
Small policy is the most you can get in final expense is with Lincoln Heritage 35,000. So we know that 35,000 a funeral is not going to be that much. So I'm saying 10, 15,000, 20,000 a small policy.
Okay. And then that way you can get immediate payout to take care of immediate needs. Because I've even
Correct.
now with churches charging, like if the person wasn't a member of a church,
Mm-hmm.
they charging to use the facility. If they have burial site or mausoleum that they want their money like right then. And I see a lot of people sending out group texts or, GoFundMe's and just saying that we don't have access to the funds right now, but these people are still wanting their money, and they're not understanding that policy, we're waiting on the insurance policy. So it depends on what funeral home, who you're dealing with, to decide, you know, if they're willing to wait to get the money.
Correct.
Because I have seen where people have had the larger policy, but the family didn't have immediate access, and they were out here asking people basically to donate to get them over that hump, even though they wasn't offering to pay you back once they got their money. But that's another story.
Absolutely. Absolutely. And because they don't know, when they have those bigger policies, they don't know if they're going to pay out or not. So the funeral home doesn't know. So they're going to say, well, we need some money. We need the family to give us some money. And a lot of times families are not able to. And that's why we really push that final expense with Lincoln Heritage, because it pays out for the family.
Okay. So is there anything else that, like, what about if you got health issues with this final expense insurance? Because a lot of life and the bigger policies, either the premiums are really high or you can't or you don't qualify for some of the policies sometimes. So what I mean, are the restrictions or the guidelines on final expense, are they more lenient?
Yes, they are. Great question. On final expense, there's no height and weight on the application with Lincoln Heritage. There's no COVID. So there's nowhere on there that they ask you a question about COVID. A lot of insurance companies, they have a height and weight graph or scale, and if they don't meet it, then they can't get covered. That's not the case. COVID again is not on there, and most things we can cover. A lot of things we can cover first day. The things that we cannot cover first day, we can still cover them. More major things like cancer, liver condition, COPD, we can cover those. And it'll be a modified. Most people, unless they're in insurance, they don't even know what modified means. So we can cover them, but it'll be a waiting period. During the first year, if they were to die, we would give the family all of the money plus 10% interest. And you know how huge that is because the banks are not giving that. During the second year, if they were to die, they would give the family all the money back plus 20% interest. As long as they live 2 years and 1 day, they get the full benefit. But final expense is a lenient. It's a lenient. We know that we can get you, most cases we can get you covered.
Okay. So
98%.
let's back up just so that we can use numbers, for example,
Mm-hmm.
just so that people are clear. So you
Okay.
saying, I want to make sure that I want to break it down so that everybody understands.
Mm-hmm.
So you saying that if I pay $100 a month and I die on the 12th month, that you're going to give me 1,200 plus the 10% interest, right?
That's it.
So then you'll give me my whole 1,200 back plus $120, right?
That's right. If you had cash.
Then this and then the second year you're gonna give me my $2,400 back plus now you're gonna add 20% instead of 10%, which puts me at $480, which puts me at 1680 for the benefit. And then if I live 2 years and 1 day, if the policy base value is 35,000, you're gonna give me 35,000.
Absolutely.
Okay. So I mean, so if nothing else, if you go with, even if you are in a critical situation, it's kind of like a piggy bank that's still going to give you more interest than you would in a bank because right now banks are giving you less than 1% interest on your money, right?
Exactly. You already know the numbers. That's right.
Okay. So if nothing else, you're going to get 10%, then 20%, and then after 2 years and 1 day, you're going to be entitled to the full benefit. So even if you in a critical stage or whatever, you still can qualify for insurance. Now, I heard that like some people, like I know there was a lot of exclusion, and I'm not in the insurance world, but I'm just asking questions for my own knowledge.
Mm-hmm.
But like there was policies that they were focusing on people with HIV and AIDS, where a lot of those people could not be insured. But with technology and different things, like people like Magic Johnson that's outliving people
Yeah,
past COVID,
right.
can you tell us a little bit about that?
Um, Now it's different in different states. In South Carolina, we cannot cover HIV and AIDS, but in North Carolina, because the laws are different, we can cover with if you have HIV or AIDS. The only thing that we cannot cover in North Carolina is if you're incarcerated. And as soon as they get out, we can cover them. No waiting period at all. We can get them covered. In South Carolina, if they have HIV or AIDS, we cannot cover them. If they're bedridden, we're not able to cover them. If they're incarcerated, we can't cover them. But again, when they come out of jail, no time frame, we can cover them. and if they have an illness that the doctors told them they have 12 months or less to live. But that's the only thing that we cannot cover. Everything else we cover.
Okay, so now back up. You said, now, what if I'm a healthy person that's incarcerated?
If you're a healthy person incarcerated, I gotta wait till you get your healthy self out of jail.
Okay, all right. So I just wanted to be clear on that.
Mm-hmm.
Okay. And that it wasn't just for HIV/AIDS people, but anybody that's incarcerated, you can't get life insurance on them. Now, what if I get the policy, but then I become incarcerated and I die while I'm incarcerated?
It does. Great question. But it does not matter if you die while you're incarcerated, we will still pay out because you got the policy when you were not incarcerated.
Okay, so as long as the policy is active,
Mm-hmm.
they're not going to just drop me like car insurance.
No, they're not going to just drop you. If you know you're going to jail, but you take it out 2 days before you go to jail, you're covered. You're covered.
Okay. Oh, thank you, Lamont. Lamont said, keep up the great work.
Well, thank you, Lamont.
Okay. So now we've kind of talked about the filing experience insurance. And so that is a great way to avoid the GoFundMe and to put a little bit of extra in your pocket where, when people die, most of the time, or not, I'm going to say not most of the time, but a lot of times that income is lost. So what is the rule of thumb of how much you should have on your companion or your spouse?
It is the rule of thumb of your income, the income of your household income. You need to be able to, when your spouse dies, when that income leaves, you need to have enough coverage to take you through at least 2 or 3 years when your spouse leaves.
Okay. Okay, so you're saying my phone is about to die, so I'm trying to get to a charger.
Okay.
So you're saying that if your spouse makes $100,000 a year, right?
Mm-hmm.
Then you need to have. Are you saying 3 years of income? So at least a $300,000 policy.
Mm-hmm. Correct.
Okay.
Correct.
And because a lot of people don't think about replacing income, especially if that person wasn't retired, a lot of people think about just paying off their house and their car. But your lifestyle, your credit cards, other things may be built around that, even though those things you probably don't let them put it on that the deceased person's credit. But a lot of things just to maintain the things that you have will need to be replaced at that time.
And also you made a good point in that mortgage protection, to get that mortgage protection, so that will be one less expense that you have. So if either spouse dies, that house is going to be paid off, so you're not worrying about losing a house because that income is gone.
Okay, now do you sell mortgage and life insurance?
Yes, ma'am.
Okay, because I know a lot of mortgage companies solicit you and advertise for that. So what's the difference between going with a company like yourself versus getting it through your mortgage company?
You would have access. You actually control that policy. If you have it, you control it. You get the mortgage company is in control of that policy. Just basically like if you get it at work. When you're at work, then that work policy is controlled by your employer. But if you get it outside of there, then you control that policy.
Okay, so we got a question here. Good evening. I'm OJ Miller. He's my buddy in real estate. So what do you think about 10 times your income?
10 times your income is outstanding, but most people cannot pay that much in insurance to have 10 times of their income. So that would price them out of the insurance.
Okay. So, I mean, you can pay as much as you can pay in premiums for coverage, And what you're just saying is, on average, it's about 3 years worth of
Mm-hmm.
income to be more reasonable. But if you can get a $2 million policy, if you can afford the premiums,
Mm-hmm.
have at
If,
it.
if it's affordable to you, then definitely do that. But we say 3 years because most people 10 years is not affordable. That's not obtainable.
Okay. All right. So, now I guess she was asking a question back to Ebony's question. Index universal life insurance. Is that something you handle or do?
Index universal life, I do not do those policies. No.
Say that one more time. I'm sorry.
Index universal life insurance policies, I don't do those.
Okay. All right. So I'll put those two questions to the side and see if we can get somebody. I'm gonna screenshot it to
Okay.
have. Um Now let's go into term versus whole life.
Great. Term versus whole life. Both of them, people say, well, why do you say term or why do you say whole life is better? It is not. It depends on what you need it for. Whole life, that's going to be for seniors, somebody that's 50 and above. You don't want them to get a term policy that's going to end because you want something to be in place. Let's say a senior, let's do examples. Let's say somebody that's 50 years old. Um, they got a term policy and they got a term policy for 20 years. Well, in 20 years, when they get 70, that policy is going to run out. And then they're going to have to they're going to have to qualify for a plan. They may have illnesses at that time. They may have gotten sick. We know that they've gotten older. So it's going to be so much for them to have one. So we want to make sure that we put a senior in a plan that is going to be a whole life. So when they die, the family knows that it's in place.
Okay.
Um, I would say a whole life, and you could do a term, but make sure definitely that they have a whole life in place. It depends on the income. I have whole life, and I also have term, but I have the whole life because I know that final expense plan is going to pay out to that funeral home quickly, but I know because my income is high that I need to provide for, and we're not getting into this yet, but I have a whole nother side, my property side, which I do with Miss Erica. And thanks to the insurance, I'm able to do the properties. So I need for that to keep going. And I need that money to keep coming to my family that handles that. So I have big term policies as well, because if something happens to me unexpectedly, then I need them to get paid really well so they can keep those things going.
Okay. So on the and then the premiums on whole life tend to be higher than term, right?
Yes, they do. Whole life builds cash value. So normally in the second to third year, you'll get it in your policy. It'll show you how much cash value that it has built up. And if you run into hard times, you can borrow against that whole life policy. Term, you're not able to. And we do something. A lot of people just do straight term. I don't like straight term because it's just paying and you get nothing for it. Once it's gone, it's gone. It's like renting a house. But if we do something that is term return of premium. So at the end of that term, then you are getting, if it's a 20-year term or if it's a 30-year term, those premiums you paid into that term, you're going to get the 75% of those back at the end of that term. So you're just not paying in, then it's over and you don't have anything. So if you do a term, I'm always telling people do a return of premium. Don't just pay in and don't get anything out of it.
Okay, that's a very interesting point, because a lot of times a lot of people tell you, okay, do 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 blah, blah, blah. I'm sorry. I lost my train of
You
thought.
fire.
Started reading comments instead of thinking about what I was going to say. But a lot of times people just looking at, oh, and then you think, okay, when the 20 year, if it's a 20-year term, that I'm just going to be out. So you said do a return.
A premium.
Okay, do a return of premium. Then I've got Corey. He is like, he the banker guru, insurance person. He was saying convert in 10 years for whole life. Can you explain or
And you can do a conversion. We have with our with one of our companies where you can convert after your plan is over. You can convert it into a whole life, and they don't do any health questions. They'll automatically convert it into a whole life. But your premiums, you will be paying the premium difference for that.
okay?
So that's correct.
I want to make sure I understand this. A so if I have a 20-year term, I've got the option to do what, I'm sorry, I didn't catch the 75% return.
Now, not all companies do that, Mr. Corey, but the other company that I do work with, they're able. If your term runs out in 10 years, if your term runs out in 20 years, you're able to convert it to a whole life.
Okay,
But
so I'm saying, so you got an option, right, to either do the return of the 75% of your premiums or to do the conversion, right? Is that
well, yeah, because you're going to get your 75% of your premiums on that plan because it's over.
so?
That's over.
So you can get 75% of your premiums and convert over to the whole life.
Because that plan is over, and then you're going to go into a whole nother plan. You're going to convert into a whole life.
Oh, okay. So you can
Mhm.
just get paid all the way around, right?
Yeah, you can get paid. Yeah, you can get paid like that if you do your return of premium.
Okay.
Return of premium, people like term because it's cheap. Return of premium is a little more, but you're getting your premiums at the end of that term. When you're just paying the regular term, is like you're renting a home. You're just paying and you're not getting anything. Uh-oh, what happened, Erica?
Okay.
I don't see you
Got
anymore.
it. Now, sorry, I don't know. So when you do the conversion to the 10-year whole life, now how does that work? Can you still borrow the cash against once it starts building up cash in that whole life policy as
Yes,
well?
yes, you can still borrow once you normally in the second and third year it starts building in the whole life. And yes, you're able to get borrow that.
Okay. Now, let me make sure that I'm not missing it. So it's that do the term and invest the rest.
I know where they're going on this one. It must be, I'm not going to even mention the company, but that's a slogan for one of the companies. Do the term and invest the rest. But honestly, how many people invest the rest? They don't. People don't invest. But
That
I've
is
heard
like
that,
more
Mr.
money
OJ.
the more you spend.
That's right. That's right. It really wouldn't be a need for insurance if people would, if they would be saving, but they don't. That's why but I've heard that term, do the term and invest the rest. I say do the term and get you whole life as well. Do both of them. Make both of them work for you.
Okay. And then I just learned about the value of whole life insurance like 4 years ago. And I admittedly, well, I think he meant to say immediately switch from term life. Okay. So let's talk about when you build this cash value with a whole life policy and you can borrow against it. And I'm just going to use this as an analogy because I think a lot of people can relate to how they borrow money from their 401k, right?
Mm-hmm.
So, would you say that that's a good analogy to say, just like you can borrow money from your 401k based on what's built up in there, you can do the same thing with whole life?
You can. That is a good analogy. The only thing that I say when you do that, if you don't pay that back, it is interest on it, so it's eating into that face amount. So if you do borrow, I would say do everything to pay that back, because it's going to bring that face amount down, because it's going to be interest on top of that loan.
Okay, so just like you have to pay yourself back with 401k, or it's going to actually go down,
Hmm.
then. And typically, if you had to compare a bank rate to the interest that they charge you on decreasing that face value of that policy, how do you think that they match up?
Uh, it's really right at a bank rate that you're going to be matching up with paying that amount. It's going to be lower, a little lower, but it's going to be right there with that, with the interest rates that you're normally doing with banks.
So, and essentially, you could take that money, build up your cash value, and go buy you a property, right? Or put a
You
down
could.
payment on a property, and then that, when he said do the term and invest the rest, then as long as that return on that property is greater than your interest and your decrease, but you have to do all the math to make sure that
Make
it's
sure it makes sense.
okay. But
Hmm.
a lot of people, because that is a way to get additional money to take and invest other places, but people don't understand that you can borrow off of that money. When you borrow off the money, it's not considered to be income, correct?
That's correct.
Because it's borrowed money and not income.
That's correct. It is. You can make it work for you. That's right.
Okay. And so that's the linkage, because now the big thing is being an entrepreneur, investing in real estate is what the two things. But I wanted to point out that people don't a lot of times know that they can leverage an insurance policy, and it's just not you paying out money, but you actually can get some returns on your investment if set up correctly.
Correct, correct. And even if you're looking at the opportunity, and I see that question, I'm gonna go there. But even if you're looking at the opportunity, because I mean this is just what I did. If you're looking at the opportunity because of the pay structure and how the pay structure is set up, it's so easily to make 10, 15, 20, $25,000 a month if you just put the work in. So that money, most people don't live on that much. I don't know. I don't know what your income is, but most people don't. So if you're making that kind of money and you're putting up the rest, I mean, that's what I did with going into real estate, and with you, Erica, and investing. I worked. I just worked my butt off, and that money that I didn't need, that extra money, I just put it away so I could pay for properties cash. I didn't have to worry about going to a bank or seeing if they would approve me or not. You can work here, you do 6 months. I mean, you can put away, depending on how you work, you can put away 50,000, 60, 75,000 real easy. But you got to go to work, and you got to go from morning to night, because the opportunity is here, and then how the system is paid. And we pay quick and we pay good. So it's easy to have that money that you don't even have to touch that insurance policy. But if you want to go that way, you can. But it's real easy to get that money to invest in and save it up.
And that'll offset, because you're working as an independent contractor if you're doing it as an agent. So then that way you got your properties to offset the income that you're making. And sometimes you can take loss or depreciation, but we're not giving tax advice. But there's ways to work around if you're making large sums of money.
Correct.
Okay.
Yeah, correct.
So
And when you're making that large sum of money, yeah, you say don't get in tax, but that's why we invest in insurance, because we need something. If we don't have anything, then we're going to be paying it in taxes. But of course, I have two children, so I want to make sure I'm building a business on the property side for them. But if I didn't, I would be paying so much more to the IRS. So it's just smart to invest in properties.
okay, so we have a question here. So the premium will go up based on your age. So explain that to
Not with whole life. Premium will not go up on your age. Not with whole life with Lincoln Heritage or with my other company that we use, Occidental Life. The premium will remain the same. It's not going to go up or down on you unless you make a change, unless you say, okay, Miss Tony, I want to increase or I want to decrease. But if you don't do any of that, it'll stay the same. Now, if you're talking about will the premium will go up based on your age, you're talking about if you initially take out a program with me, then of course if you're older, it's going to be more than a younger person.
Okay, but once it's set up, that's what your premium is for the whole life.
Correct. Mm-hmm.
Okay, so that's another great thing because then that means you're locked in for life, and at term they're gonna reprice you and all that based on age and health and all of that. Versus you, once you know you got this policy. Um, and then we have another question. What is the name of your company again?
Name of my company, Miss Lakeisha. My bread and butter company is Lincoln Heritage Life Insurance Company, and my other company is Occidental Life.
And then we have it's a win-win plan. Yes.
Yes, it is, Miss
And then we
Taja.
have a copy of agreement. And then Mr. Corey came back. A person can get a term along with a whole life. It's affordable way to maximize coverage. Um, period certain.
A person can get a term and also a whole life. That's what I said before. Depending on what your income is or what your budget is, it's gonna be, it's gonna be whatever fits your situation. So yes, you can have term policies. I do myself, and yes, you can have whole life policies, and we can get both of them affordable in your budget, but it depends on what your budget is.
Okay. And then me. If you do invest the rest, what about probate?
Miss Tasha's okay. If you do invest the rest, what about probate? Well, she's just saying, and I'm not. That's getting into tax liability that if you're gonna pay on that, and you're gonna pay the IRS. That's what she's really saying on that.
What on? Okay, so when you saying pay the IRS, what are you paying the IRS for?
For that money that you have, that money that you have that's in that bank, or that money that's what I'm talking about.
Okay.
Mhm.
Now, and then just to piggyback on
Your
this,
investments.
um, if you invest in real estate, just because this is from a real estate standpoint now, it depends on how your deed is written.
Mm-hmm.
If you got a deed that where you're in, another person's on a deed, you can bypass probate if it's rights of survivorship. So if that one person dies, it goes to whoever else is on the deed. Or you can set up a trust where the trust owns, and you can even have a car in a trust. You can have your stock account in a trust. You can have bank accounts in a trust. So then it doesn't mean that that person, that none of that has to be probated if it is in a trust.
That's true.
So if you do invest the rest, you may want to talk with a financial planner
Mhm.
who can actually offset that with a trust that you don't, and so that way you can bypass probate for your investment.
Mhm.
Okay, and then oh gosh. Okay. And I'm piggybacking off of what OJ said because he's in real estate too. So he commented trust. And
Trust.
then plus you have to pay more than the minimum premiums. I think he was saying something about what about paying more than the minimum premiums?
If now he may be talking about, because we don't double up or we don't pay our policies up. We have like a 20 pay where you pay, but we don't pay extra and pay that up. So I don't. I was looking at the comments. So I don't know what he's referring to. That he probably is talking about one of the. I don't know if he's talking about a UL policy or what he's referring to on that. What he's saying about pay them. What was
Okay. And then he said you can get a level term policy. The payments will remain the same.
mm-hmm.
Okay.
On a
So
term policy? payments will remain the same on a
The
term
what
policy.
now?
On a term program, they will remain the same as well, like a whole life. On our term policies, they stay the same.
Okay, but you saying on your whole life that they never become paid up with the ones that y'all have?
No, they do at 100 years old. It's a whole life is a paid up program.
Okay. When can the premium, when can the cash value start paying the premiums? I guess that's the question.
The cash values can start paying the premiums sometime within 6 months. It'll start paying the premiums. You're saying if someone got sick and they wasn't able to pay the premiums, then that cash value would come in there and pay them.
Right.
Yeah, with one of our companies, within 6 months, the cash value, I mean, it'll come in there and pay. So it'll keep it in force.
Oh, okay. That's
Mm-hmm.
awesome to
Mm-hmm.
know. So one, or you can say, okay, I buy a policy at 30 years old while I'm working, making money. I retire when I'm 60. Now my cash value that has built up, I can use that to pay my premiums, because if you borrow on the money, it's a lower percent than if you went out and borrowed the money. So then you can leverage the policy to actually pay for itself until your death.
That's true. Or if you don't want it, you can do a whole life. We have a whole life, and you can pay. You can do it for 20 years, where you can say, well, in 20 years, this is going to be a paid up program. So I'm just going to pay this for 20 years, and then it's going to sit here for my burial. It's going to sit, or I'm going to give it to someone, whatever you want to do with it. But you don't. It it'll be it's yours. Done. You don't make any more payments.
Okay. So essentially, it can pay for itself.
Yes. Mm-hmm.
If it's in a trust, you will keep the money and then the creditors can't. Okay. He's asking about
Yes,
IUL.
that's what he's asking about. That's what I said. He's asking about something I don't do. Miss Selena does that, but the guy Corey, he was asking about those IULs
Okay.
and paying more, so it won't run out, and funding it properly. I don't do the IULs, but I know about how you have to fund it properly and you can pay it up. But that's what he's referring to.
Okay. Yeah, because actually, Corey, he was an insurance company owner. That's why he is so knowledgeable in
Okay.
and he's been in banking, so he's got a lot of knowledge between insurance and the mortgage business.
Well, he needs to join the team over here. And not only when we were saying about, working for individual agents make a ton, but not only that, you can build your own team. You don't have to work individual. If you want to show people what you do and how you do it and how to make a great income, then that's what we do. We bring them on and show them how to do well too.
Okay, and then Eureka's saying IULs are great to have, but there's a huge surrender charge.
Yeah, again, I don't do IULs because I don't like them, because you have to fund them properly or they will run out on your and a client will think they have something and they don't. So I just stay away from the IULs.
Okay. And I mean, it's a personal preference. And that's
Correct.
another thing of, doing what you want, right? Because that's a part of having financial freedom as well as physical freedom to pick and choose what you're going to do and what you're not going to do,
Yeah,
which is
exactly.
probably priceless.
You said that right. It's a good thing that I can choose which ones I want to do and which ones I don't. But I stick with the whole life and the term.
Okay. And then Manera said, good to know. She enjoyed it. Okay. What about infinite banking? You just the insurance for girl.
Oh, that's right. Oh, Miss Eureka, I don't know. You might want to ask Erica that question.
So I'll screenshot that to
Or
get
Corey.
more, expertise on certain situations. Remember, you can't be a master of everything. You need to just specialize in what you know. And remember that you can't be knowledgeable in everything, because and
Right.
as we see here, there's a vast range of just the insurance
Hmm.
business policies, the different types of policies that you can know about or decide which fits your needs, your budget, and people that make that make that make things their niche. People that have a niche makes more money than people that are generalists. That's
Correct.
like just an example. A family practitioner, he's not going to make the money that a cardiologist makes
That's
because
right.
the cardiologist is specializing in the heart. So he's going to make more money than a family practitioner that's, just doing a general overview of the body.
You got that
So,
right.
and that's kind of, I guess, the better way that I'm saying this is that we will, even though it's insurance, but we need to just find specialists that actually specialize in those things, because you can't be a jack of all trade and master
Can't
of
be a
none.
Jack or Jackie of all trades, and I'm not. My focus is at final expense. My focus is the final expense at burial insurance, but I will do some term. I do a little term, but my focus is at final expense. That's where I make my money. That's where those renewals come in. That's where I get that what my sister calls long money from final expense.
Okay, what can I do to get started as an independent agent? So I think we kind of went over that before people were really on here. So if you just give us a brief overview of what we discussed earlier in the conversation.
Okay. What you would need to do to be an independent agent, Miss Lakeisha, is first get that license. We could set you up. You could do it online where you can study at home. We have a discounted program where it normally be $199.99, but it'll only be $39.99. And once you are finished, then you take your test with the state, pay $45, get fingerprinted, and then we would get you a contract and get you started in training.
Okay, what about people? Because I'm just assuming that the 39.99 is like an independent study.
Mm-hmm.
Okay.
It
So
is.
what do you have for people that don't do well with independent study? Do y'all have classes or recommend?
Mm-hmm. We do have classes. If you do not do well with independent study, we'll give you that information of what classes that you can take. The classes, of course, do cost a little more, but if you need it to do that, we'll definitely get that information to you as well.
Okay. Selena, because this is her niche, so the
Yes.
people that are, interested in the IULs, I would say, because this is Selena's thing here.
Uh-huh.
If the IUL is structured and funded, I think it's supposed to be properly.
Mm-hmm.
It's one of the best ways to prepare for retirement. So people that don't have a structured 401k or something, that may be an independent contractor,
Mm-hmm.
self-employed person, this may be something. And Selena, inbox
Right.
me that we can set up a time, and we could go over this to give people more information to find out if
Mm-hmm.
a IUL is something that they may be interested in, or something that they need
Mm-hmm.
um to meet a need. Okay. Hey, okay, so I got, well, we call him Darnell, but he on here is Joseph Foster. Hey classmate, does whole life insurance insure my family if they need care and kid by another mother? So I think he's asking about long-term care insurance if they need care.
Oh, because
So,
whole life insurance insure my family if they need care and kid by another one. Um, well, we could add that. I'm trying to see what he's. We could add a rider to some long term care onto that insurance if that's what you're asking. Then yes, we could do that. Kid
and
by
there's
another.
all kind of riders that can be
Hmm.
added to policies
Yes.
to, bring more cash value or to offer other services.
If they're in a
So,
nursing home and they need to have nursing home care, yes, we could add that rider to the policy.
Okay. Eddie Barbara said this is really bossed up. Okay. And I'm glad we're talking about this. I appreciate it. Thank you. And thank you for helping move the,
Okay.
conversation forward with all the questions and comments,
Yeah.
because this has really kept the conversation going. And he said,
Mm-hmm.
yes, me and my kids. Lakeisha Swapshire, great info. Knowledge is wealth. And
Yes, it
so
is.
I hope that even if nothing else, that it sparks people's information. And then we got my Sarah and Lion sister Manera, we got her Yvette, all these people under their real names on Facebook. Great information, and it's always good. I love my cousin. I love you too. Eureka's my cousin. And Shavonda George Miller, my other cousin, is
All
saying
right.
information. But I think this is topics, and we Will Black, much appreciated. Thank you, and I'm glad we're getting all this positive
Yes.
feedback from this night, because I think that it's so important, because people think that it's just another insurance, and if I'm dead, I ain't got to worry about what's going on on
Right.
the earth.
Yeah.
But we need to know these other things so that we can leverage ourselves to put ourselves in a better financial situation, and to have our loved ones in a better financial situation, because we work so hard for so many things, and
Mm-hmm.
do you want it to go up in smoke in a matter of
That's right.
hours, days, or months once you're gone? Because the people don't have your knowledge or expertise to maintain what you have, tried to build, or the things that you've made sacrifices for.
Mm-hmm.
Um, yes, very informative. A lot of us don't want to discuss this because they're afraid somebody will go ahead and she leaving the rest to us. But death is something that none of us can avoid. But I think that when we talk about things that we're not comfortable with, we get a better understanding of those things to know, okay, it's just not for death. If I can add cash value to it, if I can get a death benefit and make
Mm-hmm.
me some money all at the same damn time, like they say,
That's right. That's right. That's right.
it's a win-win, and it's not just pertaining that somebody has to die for you to see a benefit. So that's
Exactly.
why I wanted to bring out the part about, you can get premiums back. You can also, let take a loan out for yourself, and you don't have to qualify for that loan
That's right.
because you borrowing money from yourself. Um, Here, Corey was talking about generational wealth, and you hear so many people talking about generational wealth. Well, like I said again in the beginning, the four main things is insurance, stocks, real estate, and finance.
That's right.
And insurance and stock is all built into that, because they take your insurance premiums and invest it in different funds. That fund, real estate, more insurance, stocks, and that's how these insurance companies are able to keep rotating and rolling money.
That's right.
Okay. Um, Erica, I'm off topic. However, do you have anything on how to leverage credit to fund real estate? Actually, I can do another live on that at a later time. So I'll probably do that next week. And then we talk about all at the same time, right, Erica? And then thank you, Eureka, for because I didn't make notes on
Stop
this
real
one.
estate finance.
Huh?
That's right. I was reading her comments.
Oh,
That's
okay.
right.
So she
But that
did.
is
Thank you, Eureka, because sometimes Eureka's really good about being my assistant on these lives because she put in the comments what I should have had on the screen, and I appreciate that so much. And then Selena Lee is talking about how Rockefeller,
yep.
one of the wealthiest families in the world, built their wealth off of life insurance.
That's what they did. That's what they
So,
did.
hum.
I said that is absolutely correct. That's how they built their wealth off of life insurance. They got policies when somebody died, they put the money in a pot, they did businesses with it. That's how they built their business. That is
I
correct.
will tag you in the live, and that's another thing. And I don't, and again, I don't talk a lot about race on my page, but this is why there is such a wealth gap in between us as
Mhm.
African Americans and our counterparts because we don't invest in life insurance that leverages generations. And when you got generations of people collecting on life insurance because death is inevitable, um, then that creates not only he keep hearing about the housing being a gap, but us not having life insurance to leverage those funds to create more wealth
Right.
is keeping us behind as a race as well.
You're
And
right.
I don't know if you know about the story about Master P. He
Mm-hmm.
took a
10,000.
$10,000.
Yes.
I don't know what kind of policy it was. You probably know.
He took a
It's
$10,000 policy. That's right. That his grandfather left.
and created his wealth
Yes, he
and
did.
started his music business.
That's what he
So, I mean, it just goes to show, I mean, you can't stop people from dying, so you might as well get paid from it.
That's right. And some
Um,
people have a mentality that I don't want to I don't want to leave anybody anything. But that's the best way to leave your legacy. Leave them so that leave that generational wealth. And somebody commented about generational wealth too. And I don't know who was that, but that this business is the best way to have that generational wealth. Because when I don't know where else this happens at, but Lincoln Heritage. I don't know where else that this happens. But this was the best thing in this business that I saw. When I closed my eyes, the money that I've worked so hard for, and I have a team, so that money is generating, and that renewal money is there. So my son's gonna continue to get paid from my hard work, and I'm gonna be dead and gone. Normally, when you die, your money goes. So that is leaving a legacy. That's leaving that generational wealth. They don't have to be licensed at all, but they'll continue. They'll continue to get that money, and that's so huge when you're talking about generational wealth. So yes, invest in those properties, rest, but do something that's going to continue to go on for your family.
okay. Yes, thank you because I own my own business. I needed this info. I'm 45 with no retirement. I ain't got that much time with my son 10 and I'll be 50 for real. And that is the reality of it because people are not living to 100 no more. So, and I was just telling somebody else that, really when you 40 plus years old, you in the third quarter of life. You're not at halftime. You
Nope.
surpass halftime for most people because life expectancies are not as long as they used to be. And then they asked, what would Rockefeller do?
That's right.
And that's
Rockefeller
how
took in
most
some large
companies,
policies, and then they would die and leave it to those family members. That's what they did.
started with policies. And then she got preach. Um, and then thank you, Keisha, for spreading. And people are tagging other people to kind of um people in it. Yes, he did. Erica, Mr. Crawford is cool with it. that's the funeral home
Yes,
person
he
explaining
is. He's real
to
cool with it. He said, "Please get this insurance."
us. Leave wealth instead of on bills for your family. And
Right,
then
Eureka?
yeah, and then I think you have a prospective agent here, Tony. How can I contact you to get started? And Tony, if you could come under this live and drop your information at the bottom, and then that way people know how to contact you directly.
Okay, I'm trying to figure out how to do that.
Or you can do it when we get off and just go at the bottom of the comments of the live.
Okay.
Pull
Okay.
a few thousand off an insurance policy and go to a tax deed sale Then interest is 3, 6, 9, 12-month increments, or become the owner if they neglect to pay the taxes. So that's investing the rest. And
That's right.
also, while you doing it, this is I'm gonna do a live on it because today, between today and yesterday, a lot of delinquent tax bill postings were posted on people's properties. The delinquent tax bills were posted on people's properties that had not paid, and you can go around and see who has not paid their property taxes. And if you see some of those stickers on the door at the property, then some of those properties may be vacant. So you can bid on them in the next tax sale, or they'll pay you interest. But each county, each state is different for the amount of interest that they pay you. So we'll get into more of that real estate stuff because Mr. Barber is a real estate man. We'll get more into that next week. On the tax sale notices and stuff that were posted, because I've been getting people sending me pictures of people's properties that have tax notices to see, Erica, this might be a property for you. So it's always to have good people on the ground that's looking and having eyes out for you. And then he says, I've got access to all 3,300 counties.
Right.
So this is good. And thank you, Shawanda, for tagging people in the comments to help spread the word too. So I hope again that this has given people, if nothing else, more insight, a new outlook on life insurance, final expense insurance, term versus whole life. And then the comments have been really good to give them other areas to start looking into as far as life insurance goes, and to see how they can actually leverage some things financially to build that generational wealth that we continuously hear about all the time in different places.
Mhm.
Okay, so well, I
Yes.
think that we actually been on here more than an hour.
What? It
but
didn't seem like that.
yeah, but
Enjoy
it
it.
was, I think it was good, fun, informational, non-threatening way to present death.
That's
And like
right.
I said, I hope that it makes people more comfortable and more enlightened to go ahead and take out that policy. So Miss I'm sorry, Miss Tony, please do drop your information, and that way that they can have further one-on-one discussions with you.
Definitely. Will do.
Okay, thank you.
Thank you, Erica.
Bye bye.
Bye bye.